We are officially in the start of the 2026 selling season. And if you've been thinking about buying a home, or if there's someone in your life, whether it's your kids or another family member that's been ready for a while, they've been thinking about buying. So if you're either thinking or know somebody thinking of it, I wanted to share some thoughts that you can share with them today about renting versus owning. So the first thing, the reason why people rent is because it's way less upfront cost. It gives them more flexibility in terms of, there's less commitment. You can get out of the lease at the end of the year, and they feel like it's more convenient. They feel like there's less responsibility to that. The problem is that less upfront cost and that flexibility comes at a huge financial cost. There's virtually no way for most average Americans to build wealth in the United States of America without buying a house. So I want to put some meat on the bones, because everyone sort of knows that. You know that, hey, homeownership creates wealth. But I want to give you some actual graphs and data so that you can see it and see how powerful and how important it is to buy a house. So this is the 2025 estimate net worth of homeowner households versus renter households. Average renter is $10,000 net worth. Average homeowner is $430,000 in net worth. $430,000 net worth. That's huge. And I see that all the time. Whenever I get someone coming to buy a house for the first time, sometimes they'll have 10 or 15 or 20%, but that's usually rare. Usually they have just enough to buy the house, and then they've gotten serious. They've saved just enough to get into the house. But the thing is, once you've actually bought that house, that first house, you build equity up into it. As long as you retain it for at least 5 years, you're going to have a nice equity position. Then you can roll over, and that's what grows that net worth. Let me show you historically how it's continuing to rise. So this is sort of shocking. If you look at just in 2019, I don't know how you can see that, but 2019, it was $295,000. And then by 2022, it was $396,000. And now we get all the way over to 2025, and it's $430,000. So that's what's happening if you buy a house. And if you're thinking about purchasing, or like I said, know somebody, one of the biggest upfront hurdles is the upfront costs. So right now, we have available down payment assistance programs. I have 100% financing available on FHA government loans, also a second program that we have. And in many cases, 4 out of 5 right now, sellers are willing to help with closing costs. So I have a client I'm working on right now that we're literally putting together a program for them where it'll be maybe $500 out of pocket for the whole thing. I have another one closing next week that I think they're bringing in like $1,000 to closing. That's it. So that can be done right now. That can't always be done in a seller's market. It can be done right now, but what we always have available is the down payment assistance and the 100% financing. So if you're interested, the other key thing is the affordability factor of the payment. And that's a simple debt ratio analysis, which I do for you. So I am a certified mortgage planner. I build mortgage strategies as part of giving your pre-approval done. Unlike other lenders, I have a high degree of financial literacy to help you make the right decision and build the right strategy to comfortably and without anxiety buy a home in today's market. So spread this around with your family and friends. Please feel comfortable reaching out to me, and I hope you have a great day.